Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Monday, August the 18th. The year's 2025. Let's talk trading. Weekly open and gap. These videos are for educational purposes only. Your results may differ from mine. As always, have your risk management in place so you don't lose more than you're willing to lose on any one single trade or during any one trading session. So, taking a look at the weekly, we're just about 9, maybe almost 10 pips. Now only 8 pips below the weekly open, which is in the launch pad at right here. We are 25 pips off the high and 9 pips off the low. And that means we only have a 34 pip range. That's really muted. And according to the dashboard, all the weekly open gaps have filled. No, they haven't. I saw one down here. My mistake. The dollar Canadian did not fill the gap. We're putting in the opening range for the week. And once again, so far it's only 34 pips. I thought maybe there might be an explosion, but there isn't. We take another look at the weekly. You can see here we are in the candle body of the previous daily or weekly candle here. We zoom out to monthly. We're 341 pips above that monthly open and 1,031 above the yearly open. We are 248 pips off that yearly high and 1,442 off the yearly low. We had an inside bar on Friday. We are within that area, so it looks like 35.23 is the short trigger, but we'd have a short trigger at the 25 psychological, and then the long trigger is 35.75, which is the psychological also, or a psychological also. And it looks like we've got lots of inside bar action happening. I wonder if today's going to be an inside bar, so we'll have 2 in a row. You know, that just gave me an idea. I don't know if I've ever run a frequency distribution on inside bar, outside bars in a row. Might have to do a state change frequency distribution. That's another indicator, which we're going to be talking about indicators this week, but let me finish with the weekly open and gap, and then I'll get more into that. Once again, only 34 pips of range. The Euro New Zealand dollar is leading the range at 115. It looks like we've been pretty much crisscrossing the weekly open here. It's also the daily open since this is the first day of the week, trading week that is. But you can see here we jumped across the buy zone, we jumped across the short zone, but it's doing the range thing. So we do have a big range bar here, or return bar, however you want to refer to it. And you can see here off to the left, there's another one. So price may want to return to this open level, which would be a little bit above, looks like 136. That open was, 136.09. No, I'm sorry. My mistake. It was 135,609. I read that wrong. Range is too low for rat trading. Bambino Flex said to short. Pivot trading plan. Price near the pivot is short. Near S1 is long. That happened once. We'll see what happens. Okay, we took out the daily pivot. We have not taken out this week's nor last week's pivot. We have 5 open weekly pivots. But we have taken out the month. So we only have 1 open monthly pivot this month. Or rather this year. Okay, in and out of that upper wick zone from the previous day. Only 34 pips of range once again, so it hasn't even moved the needle on the smart range. Let's take a look at simple price action chart. Now, I mentioned indicators. There's a trader that all weekend's been bugging me to send him an indicator. Once an arrow type indicator tells him, you know, when to trade, I guess, and because he wants to make money. And I keep telling this trader, and I told him over a month ago, you need to learn to trade. There's no indicator that's going to make you money. Indicators don't make money. Traders make money. But he just keeps pestering about indicators. And it's one of those things that somehow there's a myth that's been put out in the trading world. And hey, I kind of believed in it too at first. I have to admit, I wasn't immune from the let's find the best indicator. Let's find that holy grail of an indicator that's going to make money. It's traders make money. Even though I still write indicators, sometimes they're, not all indicators are created equal. A lot of mine are statistic indicators, and then a lot of mine just put levels out there, horizontal lines. And so I told him, just use simple indicators, horizontal lines, like the sweet spots. Like every 25 pips or every 10 pips or every 5 pips, and trade with the candle color. And you can use the H4 open. Because all he says, he just wants to make 5 or 10 pips a day. But you really don't need an indicator to do that. Maybe he's looking for an EA. I'm not sure, but I'm just trying to give him, some advice based on trading since, geez, it's coming up on 50 years in a couple of years. I've literally been trading 50 years. Wow. So, I mean, a lot of people like to try and find the hot stock of the day or the hot crypto or whatever's hot, and they just bounce around. Where, I learned years ago, decades ago now, it's better to find your cows and you milk them every day, meaning you find an instrument or two or three or four that you know statistically work well with your method, or your method works well with them, and then you just do it. I mean, that's all Walmart trades is the pound dollar. So I switched over I used to only just trade dollar yen. I switched over to trade with him. But I just don't, I just can't seem to convince this one trader that they're going about it all wrong. Hey, we just added a pip to the daily range. We're up to 35 pips, it looks like now. 34.6. So this is one of those rangy days that Walmart's just been loving. So here's, I told him, said you could use the 3-level ZZ indicator. I also told him, it's like, you could use indicator too. I mean, it's just simple. When it changes color, then you go that way. I mean, that's, or when it, and that's like really simple, simplistic, but you're only looking to make 5 or 10 pips, and oh yeah, can you get chopped up? I mean, here you got a signal to go down, you got a signal to go up, a signal to go down, down and up. And so, here it's telling you, um, you can take trades in both directions, not to hedge, but to work your way out of a short that maybe went against you. Then you can work your way out of a long that went against you. But I mean, it's literally that simple to trade if you want to do that. I mean, does it work every time? No, it doesn't. And that's why you have to learn how to trade. Because, for example, here, if you would have taken this trade here, you would have gone down 4 or 5 pips. Maybe you would have stopped out. And what happened next, if you would have hung on, you could have picked up a pip or two. Yeah, that's hindsight in this one particular case, because, right here, the people like to say, oh, you're going to get chopped up. Yeah, you could. That's part of trading. But that's why you have to have your risk management in place. And you have to have a plan. What happened? What do you do when the trade goes against you? I mean, it's kind of like those of you who know me know I'm a prepper. And it's like you have to have your primary plan, your auxiliary plan, your contingency plan, and your emergency plan. So if you have a trading disaster, usually the response is pretty much always the same as you get out. You stop the bleeding of your money. So, fellow traders, fastest 15 minutes in trading is just about over. I hope everybody had a fun and safe weekend, and I hope you're having a profitable time at trading. But there's no magic indicator that's going to make you money. You have to learn how to trade. That's like saying, is there something that can make me swim? No, you have to learn how to swim. You have to practice. You have to get wet. Same thing in trading, because it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.